Good afternoon, good morning, and welcome to this first episode of Cash Talks. My name is Guillaume Lepec. I am the chair of CashEssentials, who's hosting this webinar. A couple of housekeeping guidelines to start. On the right-hand side of your screen, there is a chat room, and that's for chatting. And next to that, there's the Q&A tab, should you wish to submit questions, and we strongly encourage you to do so. This session is recorded, and the recording will be made available following the webinar. A few words on CashEssentials. We are a global independent think tank whose mission is to monitor ongoing developments and undertake research and analysis on cash and its future. We aim to provide a platform for balanced debate on cash, payments, and monetary system. And I encourage you to visit our website for further information. As I said, this webinar is the first of a series called Cash Talks, which will address critical trends and issues in the cash space. And this session today will focus on the issue of access to cash. It's a pleasure to welcome over 200 participants from all over the globe and across the different parts of the cash cycle. Access to cash is quite clearly one of the critical challenges that will shape the future of cash. The recently published ECB study on the payment attitudes of consumers in the euro area has highlighted the deterioration of the ease of access to cash. The level of satisfaction has dropped from 94% in 2016 down to 84% in 2019. 10 of the 19 euro area countries see over 10% of the population perceive access to ATMs as difficult or very difficult. But the issue is not limited to the euro area. In many countries, retail banks, credit institutions have continued to rationalize their branch and ATM networks, restricting access to cash services, both in terms of withdrawals but also in terms of lodgements. And whilst consumers and businesses seem to have adequate access to cash, the range of services and cash points is diminishing, and the associated costs for the acquisition and deposit of cash by businesses and the general public seem to be rising. Central banks and regulators, as well as other stakeholders, are increasingly addressing the issue around the globe. And we'll be focusing on three interesting initiatives today. Firstly, the ECB-led Euro Retail Payments Board recently published a report on access and acceptance of cash back in December last year. And we'll be hearing first from the two co-chairs of the working group. Second, the Dutch Central Bank had commissioned a study on the future of the cash infrastructure from McKinsey, and that was published in June last year. And this will then be covered by Roel van Aanholt. And thirdly, in the UK, Link, the ATM scheme, had initially sponsored the Access to Cash review back in 2019 and has since developed a number of initiatives to preserve access to cash. And we'll be hearing from Graham Mott, Head of Strategy at Link. So it's my pleasure to introduce our first panelist for today, Anne-Sophie Parent. She is the former Secretary General of the Age Platform Europe, a self-advocacy network representing some 40 million seniors across Europe. And Anne-Sophie was the co-chair of the Euro Retail Payments Board Working Group on Access and Acceptance of Cash. Anne-Sophie, the floor is yours.
Everyone. First of all, let me thank CashEssentials for the invitation to contribute the views on the challenges that consumers face in accessing cash. I'm Anne-Sophie Parent. I was Secretary General of Age Platform Europe for more than 18 years and stopped when I retired, actually 18 months ago. But I continue to represent Age Platform Europe in the Euro Retail Payment Board. And in particular, I was co-chairing the working group on cash. Here is my email address. Feel free to use it if you have questions afterwards. Let me start first by saying that actually, despite what some people believe, there is quite a broad range of consumers who need cash, really need it to just function in today's world. Children, for example, was a group that was highlighted by the working group, but also older persons, a better known group as facing difficulties. But we have also young people with limited digital skills. For example, in France, a recent study has shown that 20% of people aged 15 to 29 actually do not feel confident enough to use digital devices except for connecting with friends, calls, and so on through social media. This is actually quite a broad range of people, those with no or low digital skills. In the EU 27, about 40% of people aged 16 to 74 do not have the necessary overall digital skills to be able to use digital financial services, either because they don't trust themselves or because they just don't know how to use those devices. And it seems that these figures has not changed since 2017. So we have kind of reached a certain level of people who really struggle with digital financial services. You also have people who would be able to use digital payment means, but they do not trust them. And this is actually a group which is increasing. Even high-tech people sometimes do not trust the digital payment means for various reasons. Maybe they've had a bad experience, or maybe they just fear to be victim of scams or to have for frauds or privacy issues, which is another issue which is highlighted often by consumers. Then you still have a large number of people who do not own a bank account, estimated by the EU. And this was mentioned in the European Commission Retail Payment Strategy. You still have 30 million of adults who do not have a bank account, yet they have to be able to function. And then a group which is maybe not so well known, but we hear that from consumers regularly. Those are tourists. You find many of them among the oldest group, traveling from one EU country to another one, and sometimes other groups too, and who are affected by the declining cash supply when they travel. And whether for professional or personal reasons, this is creating problems for many of them. So this means actually that the group of consumers who cannot function without cash is quite high. Now I want to raise a few specific issues that are related to access to cash. The working group on cash had to look both to access to cash and acceptance of cash. We know that the geographical coverage of ATMs and bank branches has decreased sharply in recent years. This was even happening before the COVID crisis, but it may have been even decreasing due to the COVID crisis. Consumers are reporting increasing challenges to access cash within a reasonable distance, in particular for those groups who live in suburban areas, those areas which are experiencing economic decline in particular, where you see all the ATMs and bank branches being closed one after the next. In rural areas, this is well known, but as well as the touristic areas where you may see lots of people during the summertime or holiday seasons, and yet the cash infrastructure, ATMs and bank branches, are no longer there because during off-peak time, there is almost nobody there. And there are also other areas where ATMs are removed or no longer adequately serviced for various reasons. Sometimes it's because those areas are not considered to be safe enough. So this leaves quite a significant number of people out of reach of cash points, we would say, within a reasonable area, a distance. The new criteria used to assess the availability and capacity of ATM networks by the Euro system in particular, consumers feel that they do not take into consideration the challenges faced by some groups and the fact that the population is aging in some areas. This is particularly the case in rural areas and touristic areas. Those who stay there during off-peak time are often older people. In some countries, the criteria used to measure whether or not there is enough ATMs is to have one ATM within 15 minutes driving distance. But this is considered often by consumers as being much too much. In particular, if there is no or few public transports, you have the case in some rural areas in France or in Ireland, for example, where unless you take the school bus in the morning, it is very difficult for you, if you don't own a car, to get to the next town. Also, when at the end of the restructuring of the ATM network, you end up having only one ATM available to service a rather large geographical areas, as this can create really long queues, for example, on weekends or holiday peak seasons. And it can even be the case where you face long queues if there is only one ATM that is maintaining the high street during the big sales season, for example. We hear more and more people complaining that actually it's just not enough, not possible for them to do their normal shopping during those periods. Of course, the group also looked at other ways to access cash, for example, the cashback, being understood as meaning you do a purchase in a retail shop and you're asked to pay more with your card or whatever other means, and then you get a little bit of change back. And the cash in shop systems, which is you can find out where you can go and get some cash. You don't need to do a purchase. But usually studies have shown that those two alternative ways are used only to withdraw limited amount of cash. We have also an additional problem that consumers hear when they try and ask for cashback, for example, in a small retail shop in their area. And we heard it from the retailers themselves. They fear that cashback and cash in shop will become challenging for them if they are expected to provide a high level of cash in the future. For them, it is very complicated to plan for their cash needs. For example, I remember in a village near where I live, all of a sudden the last bank branch and ATM were removed, and the small retail supermarket was complaining that they could see many people coming in the morning, buying just one croissant and then asking for some cash. And the gentleman said it's just not sustainable for them. So cashback, cash in shop, or other alternative ways are welcome, but this alternative cannot replace the traditional ATMs and bank branches in particular, because they are the only ones to offer the full cash services. Post offices also are very welcome by consumers, in particular older consumers, and they help a lot in providing access to cash through their wide network. As you know, you find post offices in almost all small localities. Some post offices are even mandated for that. But the problem is that for small localities, actually the post offices are reducing their business hours, or they are even facing challenges to maintain their presence, where some places you don't have enough customers to come, and that makes their business model unsustainable. So we just wonder if this will be able for them in the future. Then I would like to highlight here also the specific challenges that many customers with disabilities face. For them, it's even more complicated to access cash when you have a reducing network of ATMs and bank branches. This is caused by the lack of accessible solutions in their nearby environments. Yet, and this was reminded to the working group, the European Accessibility Act actually covers, among many other things, ATMs and banking services. It has to be transposed by June this year, and it will have to be applied by June 25 in all EU member states. That requires some work to be done. And that means we shouldn't wait until it becomes compulsory to pay due attention to the difficulties faced by customers with disabilities. Now, let me just briefly also highlight a few issues that consumers face in relation to acceptance of cash, because it's fine to have access to cash, but then you have to be able to use it. And according to the data that was collected, in most euro area countries, cash is still widely accepted as a means of payments, although the promotion of digital means was boosted at the beginning of the COVID crisis. If you remember, some were fearing that banknotes and coins were helping spread the virus. Luckily, the European Central Bank did some studies and demonstrated that this is not the case. But many people switched to contactless at that moment. But also, independently from that, we see more retailers than before who now only accept digital payments. And that is becoming difficult. You have also all the unmanned services where often the only options available to pay have become digital. That can be a parking slot, for example. This is creating lots, or public toilets is a big problem also. But we even see some public authorities that start accepting only digital payments because it facilitates a lot for them, the management of their large group of customers. But this excludes a significant group of non-digital customers. And here, I would say it's very important to keep in mind that we cannot force or exclude those who face really huge difficulties when there is no alternative option available for them to pay with the banknotes and coins. We know, and you must have heard about this European Union Court of Justice judgment, which clearly stated, and it is a quote from their press release, that a euro area member states can oblige its administration to accept payment in cash, but it can also limit that payment option in public interest grounds. And I would like to really highlight the paragraph 77 of this judgment, which states that when the lawful alternative means of payments may not be readily accessible for everyone liable to pay it, it would entail providing for those without access to such means of payment to be able to pay in cash. This creates an obligation for public authorities to ensure that no one is left behind. So what can we do to improve access to all? First of all, I must say that the consumers are concerned that in many countries, it is considered not necessary to legislate to impose a minimal coverage of ATM and bank branches, because it is believed that a sufficient coverage will be driven by the market forces themselves. Yet, we are worried that the broad national indicators that are used to monitor whether or not there is enough coverage do not take on board the difficulties that some consumers or local authorities or retailers are facing. It's not only consumers who are complaining about the reducing ATM networks and bank branches. It is also the local authorities and the retailers who are complaining. In the media, we hear it almost every day, about banks' decision to close branches or to remove ATMs without a proper assessment of the negative impact such decisions will have on their daily life and the local economy. For example, we hear from local shops that this means their clients are now driving to the next town and to get cash, and then they shop there rather than in their village. For them, it is a huge negative impact on their business model. They are really losing clients as a result. So for us, we think that to improve the consumer's experience across the EU, not forgetting the vulnerable consumers, we think that common indicators could be developed to measure coverage in comparable ways across the EU. This would be very helpful. In some countries, the criteria used for geographical coverage is 5 kilometers within where you live. In other countries, it's 15 minutes driving distance. This is quite a lot, and the difference is too large. Of course, rural versus urban areas are different, but at least they could agree on the criteria to be used depending on the places. We would also consider very useful to monitor closely how access to cash is evolving in the future. The European Central Bank would run regular surveys to measure both consumers and retailers' satisfaction with the cash services that are available for them, in particular in the rural and remote areas, and also with regard to accessibility for persons with disabilities, because we have this European Accessibility Act, and it has to be implemented properly. For consumers to be able to function, it is actually crucial, and not only for those who really need cash, but those who wish to continue to pay cash. It is crucial that the development of the cash infrastructure will not be left alone to the market forces. These consumers who need cash to function are in a weak position. So we want, and it's not only us, it's the European Central Bank, it's the national central banks, they all want cash to remain an inclusive, efficient, and sustainable means of payment for consumers alongside digital retail payment means. But for that, we need measures to be able to ensure that the minimum infrastructure is deployed and adequately maintained. Here, just referring to the experience of Sweden, rather recent experience, they were trying to become cashless, have understood that actually they had gone a bit too far and that it was really difficult to the point that they had to introduce legislation. So we just wonder, is the only way to achieve that there will be an adequate infrastructure deployed and maintained? This may require actually the legal imposition of minimum coverage of easily accessible ATMs and cash points, can be different ways, and bank branches, as well as a strong commitment from all the stakeholders to maintain the necessary cash infrastructure for cash services to remain accessible and affordable to all, because that's another key issue. The affordability of using cash is under threat for the moment, and it should not become really too expensive, because most people who really cannot function without cash are actually people who do not have a lot of money, and it would really be too much for them to pay high fees to access cash. Here I just added the slides on the organization I represent here, Age Platform Europe, just for you to be able to find more information. But as I mentioned earlier on the first slides, you have my direct personal email, because being retired now, I no longer have an Age Platform email address, but you're welcome to contact any of us or my former colleagues as well. Many thanks for your attention, and I look forward to the discussion afterwards. Thank you.
Thank you very much, Anne-Sophie, and apologies to all for the technical glitch. I think it illustrates a point that Anne-Sophie raised, is that it's not because we all use digital that we actually trust it. However, we, at least during this period, need to rely on it. I think one of the very important points for me that Anne-Sophie raises is that the group of people who rely on cash goes far beyond the elderly and the poor, as is often claimed. That it also includes children, it also includes tourists, it also includes young people, and those who simply don't trust digital. I think it's a very diverse group with a very long tail. We will now be hearing from the other co-chair of the Euro Retail Payments Board, Diederik Brugink. Diederik has a rather unique and global perspective on payments, as he's in charge of payments for all payment topics from a global perspective at both the World Savings Bank Institute and the European Savings Bank Group. He also chairs the cash efficiency working group of the European Payments Council. So, Diederik, up to you.
Hello, and first of all, thanks to CashEssentials for inviting me to speak to you in this first episode of Cash Tech Talks. I'm looking forward to that, and also looking to the further ones that are due to come next. My name is Diederik Brugink, and today I'm presenting to you in my capacity of the co-chair of the ERPB, that's the Eurovita Payments Board, working group on access to and acceptance of cash. That's a working group that I co-chaired with my colleague Anne-Sophie Parent, who just entertained you before on some of the consumers' views that came out of this particular work. But I will address to you a bit more on what we exactly have been doing, where the working group was coming from, and what we have found out in the stock-taking exercise that we performed. This working group was established by the ERPB, the Euro Retail Payments Board, and the Euro Retail Payments Board is a high-level body chaired by an executive of the ECB, the European Central Bank. In this particular case, it's Fabio Panetta. And it brings together stakeholders from the supply side and the demand side in retail payments. So far, this Retail Payments Board has been mainly focusing on cashless payments. But it can be considered as an achievement of the consumer associations, notably that now also the notion of cash has been put on the agenda. As said, a multi-stakeholder group consisting of players from the supply side and the demand side. And the supply side, you have to think of banks, payment processors, and other actors that basically supply services or payments to the public at large. And on the demand side, you have the users of payment services. Think of consumers, merchants, but also governments in their capacities of users of payment services. This ERPB convenes 2 times per year, and in their high-level representatives of the associations mentioned discuss topics of interest. And if they deem the need to do so, they will establish working groups that will start working on certain topics. And in our particular case, the ERPB has decided to set up a working group on access to and access of cash. And usually for this type of work, it starts with a mandate that has been drafted by the ERPB. And in the mandate of this particular working group, it asked the working group to take a stock-taking exercise that basically lists various ongoing initiatives by relevant stakeholders in the field of access to and acceptance of cash. And the working group is also asked to identify gaps that are not yet addressed that deserve further investigations. And the working group has basically got 1 year, a little bit less than that, to exercise that stock take and to provide a report to the ERPB meeting of November 2021. So based on that mandate, the working group took off. You can find the mandate on the website of the ERPB, www.erpb.eu, which is a subsection of the ECB website. And if you look at the mandate, you see that basically the deliverable is expected to address 4 different topics, this stock take. The first is that the working group is expected to provide an overview of the factors influencing bank branch and ATM networks. So basically the I would say the natural points of access to cash for the public at large. Also a description is also possible future initiatives on how to avoid cash supplier visits in these during these channels, for example, in rural areas. The second topic to be addressed was an overview of the various initiatives aiming at ensuring adequate cash withdrawal and lodgement facilities. And this is especially targeted at small and medium-sized enterprises who usually don't engage with CITs or other companies to outsource some of those activities to. That's more looking at local cash services for those type of actors. Third, it has been asked to provide an overview of obstacles regarding the acceptance to cash and also to list some initiatives aiming to ensure the acceptance of cash also in the future. And the fourth part of the deliverable was to provide an overview and evaluation of alternative ways where other factors, for example, retailers via cashback or post offices could play a role to provide access to cash to the public at large. And also to list some possible obstacles that are hinder such cash services. So based on that mandate and that expected deliverables, the working group was composed. Usually the ERPB then launches a call for volunteers to participate in the work. And you see here in the blue buckets the ERPB members that were willing to participate in work. On the supply side, you had a couple of associations from banks, notably the EACB, the European Association of Cooperative Banks, the European Banking Federation, and the European Savings and Retail Banking Group, but also some PSPs participated, notably via the EPC, the European Payments Council, as well as EPIF, the European Payments Industries Federation, and also the processors grouped together in the EDPA joined that work. From the demand side, we had consumer associations, BEUC and H participating, and also retailers via the association Eurocommerce. Unfortunately, SME United was also an ERPB member and who represent typically the SME enterprises. They were invited too, but they had to decline due to resource restrictions at time of this particular engagement, which is a bit of a pity. In terms of NCB, National Central Banks, they are also a member of the SRB, of the ERPB in a rotating basis. And from then we had the ECP, as well as banks, the national central banks from Italy, the Netherlands, Luxembourg, Germany, Lithuania, France, and Austria participating, whilst also the European Commission participated in the work as observer, notably via the Directorate Generals ECFIN and FISMA. Exceptionally, also for this particular project, external relevant third parties were invited, and we were happy to note that ATMA, Post Europe, and EVA, the European Vending Association, participated in the work here. So with all this together, we basically took a kind of, I would say, a participatory approach to involve the relevant stakeholders as widely as possible. And we engaged a lot. The working group was established, let's say, in the beginning of 2021, and we had to deliver by November 2021. And in that time span, we organized 16 plenary meetings, and also in order to address the 4 different deliverables that were mentioned before, we established 4 work streams, one each for the 4 deliverables mentioned. Who were operating basically under the auspices of this working group at the plenary level. The work streams organized numerous virtual meetings themselves, and progress reports were provided to the plenary meetings every time a plenary meeting took place. Once the work stream completed their individual reports, the full report was worked on collectively, and this particular report was submitted on time to the ERPB on the 4th of November 2021. And here you can also see graphically how the work actually took place. You see the working group with the 4 work streams working below that. And especially in the beginning, the work streams worked on developing the questionnaires that were used for the stock-taking exercise. These were sent out just ahead of the summer. And ahead of the summer, also stakeholder feedback was collected. That was analyzed over the summer, I would say. In June, the working group delivered an interim report to the ERPB. In August, the subsections were finalized more or less by the work streams. And by the end of October, beginning November, the final report was due and was sent to the ERPB. And by the way, you can find this report also on the ERPB website that I mentioned before, just to you. In terms of key findings of the report, what we found as a result of the stock take was that we noticed that there is a great variety of initiatives aiming at ensuring access to cash amongst the country, which was quite positive to read. We also noticed that, generally speaking, access to cash is being ensured mainly via traditional cash access point and branch networks of credit institutions. That means, of course, notably ATMs as the privileged channel. We also noticed that the profit cost model, sustainability, and the service level of operating the ATM and branch networks are key for the smooth operations. And as also an observation was given that as kind of a network model, it's key that all stakeholders in this cash cycle need to play their role and need to cooperate closely in order to ensure smooth provision of these cash services. Looking a bit more in detail to the questionnaires and the responses we received, that we noticed there that the distance and capacity criteria for cash access points have become a quite important topic over time. But at the same time, we also observed that the criteria varies across the various member states. And also, we believe, as a result of what came back of the questionnaires, that the appropriateness of these criteria should still be validated in the future. In some of these member states, those are already part of a national action plan to retain or even increase access to cash, and usually that's then being put forward in a non-legally binding way. But some other mentioned that also further action may be taken, if necessary, also in the form of even legally binding ways to provide minimum cash access point networks in those jurisdictions. What is also mentioned by some in the questionnaires is that a lack of harmonization has been identified for accessibility requirements stemming from the European Accessibility Act. This act aims at providing easy access to services and hence also to ATMs for people that have specific requirements. But if these requirements are being interpreted in different ways in different member states, it's quite difficult for those actors that operate across borders to buy a single ATM type that they can deploy in all the different countries. Because if each country has different specifics, it will basically lose the advantages that you have with being able to buy these ATMs in bulk. We also observed from the questionnaires that special needs in rural areas, as well as the special needs of the aging population, may deserve further investigation going forward. Having said that, looking also further on, the feedback also noticed that independent ATM deployers, cashback and cash in shop schemes have been identified in the feedback as complementary cash access points that could provide access to cash services going forward. And they may even start playing a greater role in the future going forward too. Of course, these additional channels cannot be seen as fully fledged alternatives to the traditional networks, notably branches and ATMs, because also banknote depositing and coin service functions are generally not provided by those, let's say, newer type of channels. Interestingly, also observation is that the role of post office, at least in those countries where they still existed, in offering cash lodgement and withdrawal facilities has been recognized given its good geographical coverage. But again, we also observe that in a lot of countries, post office do no longer exist as such. Finally, another observation was that more incentives may be needed to make the offering financially attractive for retailers and other relevant stakeholders to play a role in providing access to cash services. And looking more at the acceptance side of cash, it has been observed that most merchants in general accept cash as a reliable means of payments, provided that adequate cash infrastructures exist, of course. Also, next to the several initial initiatives to ensure acceptance of cash by retailers in the form of more alternation, more clarity on the notion of legal standard of cash is expected, especially interpretation of mandatory acceptance of cash versus the contractual freedom when choosing a payment instrument accepted by retailers and shopkeepers to be postulated. We of course noticed that there is a debate ongoing in the ELTEC, the Euro Legal Tender Expert Group, that might provide some steer, but you are also aware of a recent judgment of the European Court of Justice that put some challenges about the, generally speaking, the legal tender status of cash. So more clarity is required there. But all in all, the working group sees a merit in revisiting the evolution of cash access and acceptance in the future to ensure that, in line with the strategy of the euro system, the cash strategy in particular, that cash will remain an inclusive, efficient and sustainable means of payment for consumers alongside digital retail payments means. What does it then all mean together in terms of conclusions? What we could observe at least was the fact that there is no problem at the moment that needs fixing, which is quite a positive aspect. But on the end, we are close to, and at some point in time, we might reach a point where it starts to move into the wrong direction. So to that end, we believe as a working group that it will be good to keep, let's say, the finger on the pulse. So the need to ensure continuous access to and acceptance of cash, despite the several obstacles identified in the report. It stems from a number of its unique functions. For users, the traditional functions of cash are, of course, inclusiveness, budgeting, store value, autonomy, and privacy, of course, on top of the payments function that cash offers us as well. If you look at it from a payment systems perspective, cash fulfills also the following function, like backup, legal tender status, and it's also at the moment the only public money available to the general public at large at the moment. So taking that all into account, we see a merit in revisiting the evolution of cash access and acceptance in the future to ensure that, in line with the euro system cash strategy, cash will remain an inclusive, efficient and sustainable means of payment for consumers alongside digital retail payments means. And also to make sure that we will have consistent delivery of cash services. We believe that the minimum cash infrastructures is required going forward. This report was presented to the ERPB in November 2021, where it was received very well by the members of the ERPB, which was quite positive. And ERPB agrees with the fact that the evolution of access to and exit of cash should be further monitored, either via a new ERPB working group or maybe via a dedicated body, like, for example, the European Forum for Innovation in Payments, also known as EFIP, which is basically consisting of the ERPB members together with the national payment communities. But it could also be done by some body like the Eurocash Advisory Group. And all these monitoring exercises, if taking place, should happen in consultation with industry stakeholders. Also, it was debated whether a study on post-pandemic consumers' attitudes toward payments in the euro area or a study on the societal costs and benefits of different payment means in the euro area, of course, with a minimum number of participants, would be welcome too. And the ERPB then finally concluded that they welcomed at least the comprehensive analysis provided by the working group, and also indeed agreed to consider the follow-up actions raised by the working group in the next update of the ERPB working program, taking into account these existing fora workstream as already mentioned. So having said that, it was quite a lengthy journey to be involved in this particular work, quite intense years of debates with a lot of stakeholders throughout the cash value chain. But I think we managed to deliver indeed a comprehensive report, and I think we can also consider it as an achievement that the topic of cash has now been put more or less permanently on the agenda of the ERPB. So with that, I hand over back to the moderator. I would like to thank you for your attention. Thank you.
Thank you very much, Diederik, and very warm congratulations to both Anne-Sophie and yourself for successfully leading this working group and producing what I thought is a very interesting report. One key takeaway for me is the need for a sustainable cost-profit model to ensure continued access to cash. For years, we've been focusing on reducing or optimizing the cost of cash. And now we see that this has led to a shrinking infrastructure, but also higher costs. And I think we need to start rethinking this business model, and possibly think about whether the cash infrastructure can be left entirely to market forces. Now, to further discuss the topic, we'll hear from the Netherlands. Netherlands is a country where the number of ATMs has dropped by 40% since 2008. And the central bank and other stakeholders have been proactively working on this for quite a while. And to enlighten us on this approach, it's my pleasure to welcome Roel van Aanholt, who's a policy officer at the DNB. Thank you.
Yes. Well, thank you very much. Hello, everyone. It's a pleasure to be here today. In the coming 15 minutes, I will be presenting about the latest developments in the Dutch cash cycle. I really think we are at a critical tipping point regarding the cash infrastructure, which I think is very interesting, and hopefully you find my presentation interesting as well. So what I will be addressing today is the following. I will refresh your minds by explaining very briefly how the cash cycle evolved in the last decade. And then I show you some figures based on new research. This will also be on access to cash, obviously, because it's the main topic of this webinar. I'll explain why the cash infrastructure is under a huge amount of pressure and why it continues to be more pressing every day. To stop the tide, we tried to close a covenant on cash with all relevant parties in the cash cycle. But I think even if we will be successful in closing a covenant, we will still face some major challenges. So I'll be explaining more about the covenant and the challenges yet to come in this presentation. Let's have a brief look at how the cash cycle evolved. I've just indicated some key measures here. A little more than 10 years ago, we still had about 18 cash centers up and running, but throughout the years, the number decreased, also due to the decrease in demand for cash and the use of cash. And so today we only have 8 cash centers left. 1 is owned by the central bank, 2 by Geldmaat, and 5 by the armored carriers, the CITs. Perhaps good to mention, for those who are not aware, Geldmaat is the Dutch joint venture by the largest commercial banks, who now operate the largest ATM network in the Netherlands. So basically it's an ATM pooling company. When we have a look at the CITs, we had 3 CITs with a nationwide coverage, which were Brinks, G4S and SecureCash. In 2015, only G4S and SecureCash remained, and today we have only 1 big CIT left, which was G4S, but well, G4S was acquired by Brinks some 2 years ago, as many of you probably know. In terms of the number of ATMs, we can clearly see a decline too. About a decade ago, we still had more than 10,000 ATMs, and in 2015 we had only 8,000, and now we have around 5,000, of which 1,200 are being owned by independent ATM deployers. Well, on the positive side, we see a clear increase in the number of recyclers, making the cash cycle more efficient and providing more depositing services. Let's have a closer look at the number of ATMs in the more recent years. I have depicted here the total number of ATMs in red and the number of ATMs owned directly by banks in blue. And as you can see here, there's a steep decline in the number of ATMs which are owned by banks. In only 3 years' time, all ATMs by banks have been transformed from banks to Geldmaat labeled ATMs. In principle, the Geldmaat ATMs can still be considered bank-owned ATMs because banks are still 100% shareholders of Geldmaat. But for the people in the streets, what they see, for the public, it seems that that banks don't have ATMs anymore because they are not bank labeled anymore. And also, all ATMs are removed from bank branches. So if you travel to the Netherlands, don't expect to be able to withdraw cash in a bank branch, but you have to find ATMs elsewhere, probably at a bigger retail store, either through the wall or in store. Then let's have a look at this, at the share of payments done in cash at the point of sale. What we have seen in the Netherlands is that the percentage dropped from about 30% payments done in cash to 15% in the first wave of COVID. So that was a huge drop in this percentage. Thereafter, it stabilized at a 20 to 25% level. And apparently, other waves of COVID did not really have a significant impact. I think what contributed here is that the public was educated better after the first wave about the very limited chance of spreading COVID via banknotes and coins. Let me give you some other, maybe more comforting figures on cash in the Netherlands. Still, the average ATM availability is around 96 to 97%. In terms of accessibility, 99.5% of all inhabitants in the Netherlands have access to an ATM to withdraw cash within a 5-kilometer reach. It has been top priority to keep this level as high as possible, and yes, those efforts really paid off. Still, 97% of all merchants accept cash as a means of payment, which is also still pretty high. And if a customer needs assistance to use an ATM, this is still possible at about 400 locations, although not in a bank branch anymore, because there's no cash in a bank branch anymore, but assistance is provided in a bookstore kind of stores with the Geldmaat ATM. And lastly, withdrawing cash in the Netherlands is still free of charge for the vast majority of consumers. But the tide seems to be turning, and I'll explain more about that. So, a study was conducted by our National Forum on the Payment System, and this shows some worrying figures on cash services for retailers. Clearly, compared to 2016, merchants are not happy with the availability of depositing services. Whereas in 2016, the perceived accessibility scored a 7.1 out of 10, this score was much lower last year. I can understand the score of 4.1 for depositing services via bank branches, because depositing services were also being removed from bank branches. But then Geldmaat should have provided also the depositing services thereafter. And still, merchants perceive also at Geldmaat a much lower quality of service, which is a 5.4 out of 10. So Geldmaat really needs to do better there. If we look at the cost of retail payments in cash, we clearly see why it's starting to pinch for merchants. A cash transaction at the point of sale is costing the merchant 49 cents in 2020 compared to 29 cents 3 years earlier. An important factor for the increase in cost per transaction is probably the increased charges by banks for depositing cash. But nevertheless, it's a huge increase over there. Although that the total cost of retail payments declined with nearly 100 million on a yearly basis. So that it is under increasing pressure also follows from the following points. So by greatly reducing the number of ATMs in the Netherlands, the redundancy is removed completely from the ATM network, making it more vulnerable for outages. Also, if there's if one ATM is not functioning anymore, there may be not another one nearby where people can go to. So it's becoming more of an issue if ATMs are going down. Also, last year September, we saw a serious drop in the ATM availability, although it was only temporarily. Still, it went below 90%. So this was a serious issue, and maybe also a reason why the merchants were not really happy last year. There is no possibility anymore for customers to order cash at the bank branch. And also next to that, we see a strong increase in prices which are being charged by banks to retailers and consumers. And yes, the cost pressure on retailers also causes retailers to actively discourage the use of cash at the point of sale. And this is becoming more of an issue. Although they still accept cash, they do start to discourage the use of cash. So, how to proceed? So McKinsey did a study last year, commissioned by DNB, by the central bank, and they concluded the following. They said that cash remains very important in the Netherlands for those who want to use cash as a means of payment and for those who are dependent on cash. Also, they highlight the importance of having cash in the case that electronic payments fail, so as a sort of a backup payment system. And therefore they said, okay, do not downsize cash and the infrastructure any further, and make sure that the acceptance at retailers stays at a high level. Well, basically, to ensure this, we are currently working on a covenant on cash. This covenant has to be signed by all large banks of the Netherlands and all representatives of consumers and merchants, as well as Geldmaat and Brinks, so basically all relevant parties. So to be clear, the covenant is a multilateral agreement and will not be anchored by law. In the Netherlands, we have a long tradition of making such agreements. So hopefully it will work out perfectly and well this time again. However, the Ministry of Finance already indicated that they will prepare legislation if the covenant will not be signed. We shall see. I think we will know more about the covenant in the coming weeks, whether it will be signed or not, and then what happens. As a last remark to wrap up, in the case we will be successful in closing a covenant, we still know what after 5 years or so the use of cash will be. We know that it will be lower than it will be today. As McKinsey also pointed out, there might be a point in time where cash becomes more like a public good, and so we might need legislation and maybe a greater role for the government. There are also many options which we need to investigate further. Either banks have to be obliged to continue to operate and fund the cash cycle, The government may subsidize or a universal cash supplier should be appointed to sustain the cash cycle. There are many options which still need to be investigated. So I would say a very exciting time still yet to come in the Netherlands. This was it. Thank you very much. I hope you liked my contribution, and I'm open for any questions you may have. Thank you.
Thank you very much, Roel. I think you perfectly illustrate yet another paradox of cash. As usage declines, we see costs increase. Perhaps an obvious but perhaps naive solution would be to increase usage to reduce costs. Our last presenter is Graham Mott. Graham is head of strategy at the British Interbank Link ATM network. And as you will see, Link has been an early mover on access to cash. Graham, the floor's yours.
Hello, good morning everybody, and welcome to my presentation, which is on initiatives to ensure access to cash in the UK. So we'll be talking about what's been happening to cash in the UK and how the industry and various stakeholders have been working together to try and resolve some of the issues that have been brought about by some of the structural changes that have been happening with cash before the coronavirus pandemic and some of those which have been happening since then. Okay, so here we've got the agenda. So we're going to talk a bit about the coronavirus crisis, of what effect it's had on cash use, Link's financial inclusion programs, which have been going back some time now, but have been developed and enhanced a lot in recent years. Cash at the Till, which is a new initiative that has just been launched and could well be sort of quite an important part of cash access in the future. Then the Access to Cash review, which is some of you may have heard about, but it was done a few years back now, but it's really set the agenda as far as protecting cash and what we should be trying to do for cash. And then lastly, the Cash Access Group, which is the most recent initiative, most recent development, which is beginning to sort of bear fruit now and will be taking us forward into the next few years. So what I wanted to start off with was really just a sort of brief summary of the sort of where we are with the coronavirus crisis. And as I was preparing this slide, I was sort of quite conscious of, quite a wide audience, and that, different countries' experience of this is different. Different countries' experience of this at different times is different. So where we are in the UK, maybe we're different from where we are in Europe, and different parts of the world as well. And countries have reacted in different ways through in terms of lockdowns and things like that. Although there's been pretty broad consensus in terms of lockdowns and restrictions on travel and things like this. And certainly when you speak to people in different countries and look at it, that the effects are pretty consistent, and although the timings may be different to what different governments have done, the overall changes, whether it's the United States or Australia and New Zealand or Europe or the UK, are broadly the same. But it is a fast moving position. Where the UK is now, it's very difficult to compare perhaps with other countries. Possibly we're slightly ahead of the latest curve, having sort of actually the Omicron variant earlier than other countries, and therefore it is possible that we may be coming out of it earlier, but time will tell. And these developments have a habit of changing very, very quickly, and certainly I think one of the lessons of this period has been what was originally people saying, oh, mentioned it will be over by Easter, or it will be over by the summer, it'll be over by Christmas, and obviously now we've had 2 Christmases since then, and there seems to be some optimism that life returning to sort of, if not normal, some sort of normality is getting closer. But these things have a habit of changing, and I think also the perspective at which people look at this. I was conscious when I was thinking this. I did this slide, a similar slide for the UK audience, and I said this was the biggest transformative event for sort of 40-50 years, but that may not be the same in other countries. So other countries have experienced big changes since then, and much more recently. So it is a big change, but it does vary where you live and what your perspective is as to how big a change this is to others which have taken place. But I think what the the lessons and the changes are massive in terms of our lives and the use of technology, which is where it's important when we start thinking about cash and digital payments, is that, if the crisis had happened 5 or 10 years ago, the ability for us all to work from home, the ability for us to have broadband, the ability for us to use laptops, PCs, mobile phones, and these sort of things, the ability to shop from home would have been very, very different. And the reaction to the coronavirus crisis would have been quite different. And therefore, some of the changes may have been facilitated by the technologies that we have in our homes and that enable us to work in different ways. And I think, looking at the changes, it's not settled into whatever the new normal is, but many of the changes were already happening to a certain degree, but they've just been accelerated. And, the future in fast forward has been mentioned, or turbocharging the future. And I think that's probably the case. Cash usage had been declining. The digital payments, whether it was card payments using phones or contactless, had been accelerating, but they've accelerated much quicker. People were working from home, and even travelling into London before the pandemic, it was noticeable if you were travelling on the train that Fridays were markedly quieter than earlier days in the week, and Mondays were beginning to go the same way as well. So the working week of commuters was beginning to already focus around the middle of the week. That's Tuesday, Wednesday, Thursday. But what the crisis has is brought that forward. Now, where we're going to be in the future is a job to tell. That there are those who perhaps optimistically or for various reasons would like to see things return as they were before. I think that is probably unlikely, but they may return some direction to where they were before. And I think some of the changes, working from home, which does affect cash usage, it affects people's opportunities to go out, and effects on city centres, may take a long time to settle into new normal. And I don't think we'll ever go back to where they were before. This is personal opinion. You may have different views, but so it seems that what we've got here is an acceleration of trends that were already existing. So what we see in the next couple of slides is, ATM use has declined very significantly, and it remains much lower than it was at pre-pandemic levels. So although, it hasn't disappeared completely, and there were, in the very early days, we were wondering whether it was going to disappear completely, it has dropped to a new level below which, some significant way below where it was before. Okay, so looking at what's been happening in the UK, and we publish this data on our website, so you can always refer to that on a monthly basis, and we have daily, weekly updates as well. So you can see, if you look up to, across at the top line, which was where we were in 2019, there was already quite a significant decline in cash, and cash was declining about 10% through that year. So that was quite a marked change in consumers' behaviour. And the very start of beginning of 2020, so before the pandemic hit, and you can see there it was already markedly down on where it had been the previous year. So this, there was some bad weather at that time of year, which was unusual, but even so, there seemed to be a definite trend, a structural change in the way people use cash. Now then, obviously, it dropped off a cliff when the coronavirus struck and we were all locked down, and then it recovered to a sort of the second half of 2020 into a sort of very, very stable position. And this was very striking in the week on week. The transactions barely changed. There were 1 or 2 percentages. They were very, very stable. And some of this was due to lockdowns, and you couldn't travel internationally. It was very difficult to. And so therefore, people were spending time at home. People weren't varying their routine between one day and the next. They weren't varying their routine through the months because everyone was at home. And although there were relatively few restrictions in the second half of 2020, it was, people's behaviour had changed. And so there was a very, very stable use of cash right through 2020. We had a lockdown in November, which is a little dip you can see there. But as you can see, it was much flatter, in fact, than we'd seen before. So in 2019, there'd been quite a decline in the second half of the year that we didn't see that in 2020. 2021, we had another lockdown at the beginning of the year. It wasn't quite as strong as previously, so that knocked back cash, but it took some time for that to end, and it wasn't until sort of May, June time that transactions started to pick up, and it picked up to a level we'd seen pretty much at the end of 2020, the previous year, 2020. So, then they followed each other again, spookily close to each other right through to the end of the year. And since then, at the beginning of this year, we've had cash use rising, not spectacularly, but it has been rising a bit. As you can see the red line there, and it's not yet at the levels it was achieving towards the end of last year. But January is usually a quiet month. for ATM and cash use for all sorts of reasons. So it seems to be rising up again. But I think the lesson that seems to be from here at this stage seems to be that the structural decline we'd seen in 2019 had slowed, if not stopped. So therefore, an argument which has been put forward is that those people who are going to stop using cash have stopped using cash, and those people who are still using cash have pretty good reasons for wanting to use it, whether it's choice or habit or whatever, but they still like using it, and therefore we may not see, as we go forward, looking forward to this year and next year, we may not see the declines in cash year on year that we'd seen before. Now this slide is pretty much the same or similar information that was on the last one, but really just shows the full time sequence and the volume of value with various events which were in the UK, so they were obviously different in different countries in terms of when lockdowns were, when various measures were introduced. We had a sort of eat out to help out thing back in August 2020, which was designed to encourage people to go out and shop and spend money in restaurants and things like that. It was possibly unwise, but it definitely boosted a bit of usage that month. As you can see through last year, it was more stable as the various measures were relaxed and then in fact reintroduced towards the end of the year. But I think what you would say is that the underlying trends weren't affected very much by short-term changes, whether they decided to allow pubs to reopen or restaurants reopen or close again. It didn't really either see a dramatic increase in cash usage or a dramatic collapse in cash usage. We didn't see that. It followed much longer term trends on that, but it's an interesting slide, and we will continue to monitor that. We've ended now Plan B, and work from home is officially finished here in the UK. So your masks are now voluntary rather than you have to wear them, although many people still are at the moment, but that is likely to change over time, and that habit may change. So as I said, as we move forward, we will continue to monitor this, and it will be very interesting to see how consumers' behaviour adapts over time. So what's Link been doing about financial inclusion? And the next few slides we'll talk about that. So Link's been involved in access to cash and protecting consumers' access to cash for many, many years, and our first programs go back to sort of almost 2006, 2007, back then we set up a consumer council. This was relatively unusual, but it was a group that was set up with an independent chairman and people from the voluntary sector, from consumer groups and from ATM operators, and it was designed to sort of make sure that Link's objectives and performance was meeting consumers' need and those people who wanted to use cash rather than necessarily the needs of the members, which might be slightly different. It should be the same, but not necessarily be the same. So that's been launched some time ago, and at the same time we launched a financial inclusion program which really concentrated on areas which were deprived. So we looked at areas that were relatively deprived in the country, and those little red dots you can see there. And areas, ATMs, or areas which didn't have an ATM in those areas were subsidised, and they got extra interchange, so the ATM operator got an extra fee for that. Because of the way they measured deprivation, we used a government statistic, it tended to focus on city areas or built up urban areas rather than rural areas. You can see, if those of you familiar with Britain's geography, the little red dots are mostly concentrated in cities, and often not in the centre of cities where there's usually lots of ATMs. It's sort of around the periphery of cities and sort of the donut around this inner city area, which is often quite deprived and doesn't have many services and facilities, and that's where those areas are focused on. So that programme ran and continues to run very successfully. The next one we did was a protected ATMs, and these were looking at ATMs specifically which were a long way from other ATMs. So this is what we call lonely ATMs, ATMs more than 1 kilometre away from the next nearest free to use one, and they were protected by having their interchange level frozen, and also by, if they were removed for whatever reason, the shop closed or the ATM operator decided they didn't want to run it anymore, then we would do our best to replace them by approaching ATM operators with subsidies, or even commissioning ATM operators to install machines themselves. And as you can see from the little blue dots on the map, they cover much more of the sort of the rural areas of the United Kingdom, and it's been very successful. Those ATMs are in almost every case still there. There are occasional cases where we can't, perhaps a very small village, there may only be one shop for whatever reason. The shop closes, there's nowhere to put an ATM, but it has been a very successful program. And that continues. And I say this direct commissioning means that if necessary, we will, commission directly from an ATM operator. We don't run the machine directly, but we'll go to an operator and say, run this machine on our behalf, and we will pay you a premium for that. We also have a suggested site facility, so communities or local authorities or politicians or members of the public can contact us and suggest sites, and we try and if the ATM is genuinely needed in that area, there's an access to cash requirement, then we will work with that community to get an ATM, and that's been very successful with local politicians and MPs and things like that as well. Our latest initiative is Cash at the Till, which is basically cashback. So some of you may be familiar to this. So if you go into a store, for some time in the UK, or many years, you've been able to, if you're buying something from the store, you can round it. You can take cash as well. So if you buy something for £30, you can take £20 worth of cash, and it's added to the bill. So your total debit is £50, and you'll be handed a £20 note or whatever by the cashier. And that's been running quite successfully. In fact, there's over 70,000 locations for this right across the UK in petrol stations and convenience stores and supermarkets and the like. But the new program that we introduced, and it started in October last year, which we're calling Cash at the Till, the crucial thing here is you didn't need to make a purchase. The old cashback scheme required you to buy something. You could buy something small if you wanted, but you basically had to buy something and it was added to that bill. With the Cash at the Till, you don't need to do that. So if you want to go to your passing convenience store or whatever it is, most of these are convenience stores at the moment, you can go in and take cash over the counter using your card without having to make a purchase. Or you could take the cash out of the till and then use the cash to buy stuff as well, which you could obviously do as well. So that's been now rolling out. There's the number of machines or terminals is rising rapidly, and usage is rising rapidly as well. So that's not been heavily promoted, and through quite a lot of that time, we've been in varying degrees of lockdown. It's growing well, and the feedback we've had from consumers is very positive, and particularly those who want unusual amounts. So they don't just want to go to an ATM and take out £20 or £30 or a round amount. They might want to take out pounds and pence. They want £14.75, or they, particularly those who've got limited budgets, and at the end of the month they haven't got large amounts of cash left, but they want to take that last penny or last pound out of their account, and that's an important part of that. So an important program, and the other advantage of this program is, of course, you don't require the infrastructure of ATMs. You don't require a big expensive ATM or relatively expensive ATM there, and therefore it enables us to offer access to cash in areas where you couldn't justify an ATM. The shop may be too quiet, it's in a small village, it's in a part of town which is not many people visit. You couldn't justify an ATM there, but what you can do is have access, cash at the till, and people can still get the cash. So a very important initiative, and I think it will, as we go forward, be an important part of the armoury in terms of providing cash access. Next slide looks at the access to cash reviews. Again, some of you may have heard about, but it was really the review that set the scene for cash access and what we'll be trying to do going forward. And the access to cash review was published back in March 2019, and it was set up. It was commissioned by Link, but it was an independent report, and that was an important part of it. And it was chaired by Natalie Seeney, who remained very, very heavily involved in cash access. It had an independent panel, so although Link was represented on the panel, the others were from consumer groups. We also had observers from the Bank of England, from the Payment Systems Regulator, and then we had a lot of people from consumer groups and alike. And really what this was to take a end-to-end view as to what people are using cash for and how we could protect it. And it really has set the agenda for cash access in the UK. Although it was in 2019, which seems a long time ago now, it's not actually that long ago, but it seems a long time ago now. It was looking forward for a significant period, and it has really set the scene as to what the country should be doing as we move forward. And it came up with 5 recommendations. The report itself is available online. You can download it from our website, or there's an Access to Cash website as well if you haven't seen it already. And guaranteeing access to cash was the first one, which is obviously critical. Cash acceptance is important as well, and I haven't really had a chance to talk about that, but it has definitely been affected by the coronavirus pandemic. A lot of shops have discouraged cash usage, or not outright banned it. They're quite entitled to do that in the UK. There's no requirement for a shop or anybody else to accept cash. They don't have to do that. So that remains an issue. Infrastructure is an important element, so that if cash use really declines, at what point does the infrastructure become economic? It's provided by commercial operators at the moment, so they have to make money out of it. And if at such point it's insufficient, or the spread of it is insufficient to make money, then that would create problems. But also, you're looking positively. It's not just about protecting cash forever. It's about digital access and making digital access for everybody. And we said at the start, during the coronavirus pandemic, there has been a marked increase in people using online banking, people using, contactless has been increased a lot, people using their phones a lot. But in many cases, I think these were people already moving in that direction. I think there's not been a fundamental change. There's been no new services, for example. So as a result, I think there's still work there, because there seem to be definitely a nucleus of people who, for whatever reason, find digital payments difficult to use. And then lastly, joined up oversight and regulation. And there has been some change here. The government has, in the UK, said they're going to introduce legislation. We're still waiting for that. It hasn't arrived yet. There is regulating between the Payment Systems Regulator, the Bank of England, and the Financial Conduct Authority, which also looks after banks and things like that. So at the moment, I think there is still a sort of quite a jigsaw of regulators, which are all separately involved in cash. And I think that is an area which hopefully will be looked at, and we're working, basically Link's getting on with it in the meantime, but it is an area that needs looking at. And finally, we've got the Cash Access Group, which was set up directly following the Access to Cash review, and this involved banks, particularly getting together, and other members, other people in the cash industry, working out what they could do to resolve these issues. So the Cash Act, this bit of work is ongoing. It's looking forward, and so this is sort of the latest position. So announced in December 2021. So just very, very recently. Very important moment, because for the first time, banks, consumer groups, post office, and joined forces, and Link joined forces to really say we're going to protect cash. And in particular, and this is the sort of exciting development, is that we would start looking at shared facilities. And this is something that's been talked about for many, many years, but it's really starting to to come together. Some of that is developments of existing facilities, so using post office counters, which you can use for some time, but making sure they have the capacity to deal with extra demand. They can, the staff are trained to work with extra demand. The extra facilities and services can be offered through post office counters, and there's about 14,000 in the UK, so it's a very, very large network. And then the other area, which is people's eyes, are what they call banking hubs. There have been some have been piloted and been very, very popular. And so these are, shared facilities. You can see there's a picture of one there, which, there's staff different days of the week from different banks go in there, but a consumer can go in and can access their banking, pay in checks, they can pay in cash, they can take out cash and this sort of stuff at a shared facility. And so this gives an opportunity for a town or a part of a town district which can't run or justify a bank branch on its own, because there's not enough customers of a particular bank there. But what there might be is enough customers from all the banks together can access the banking hub. And so therefore this is something we're working on, and as we go forward, more of these bank hubs are planned to be installed. It's very early days, so finding facilities, finding the premises is difficult, and this is a long-term program. So in the second half of this year, moving forward, but 2023, we expect to see more of these gone out. But it's really important element of this is there is a agreement from the banks, from people like Link, to work together to make sure that customers will continue to have access to cash, and will share facilities to make sure that customers can still have access to cash. So thank you very much. I hope you found the presentation interesting. We're going to take questions. Always very happy to speak and hear what you've got to say, and very happy to hear from other people's experiences as well. So thank you very much for your time. Thank you.
Thank you, Graham. And again, apologies for the technical glitch. I hear the metaverse is rehearsing, and they're absorbing pretty much most of the global bandwidth. It's encouraging to hear that the decline in usage has stopped in the UK, and it will be interesting to see whether this is an early signal of a return to higher cash usage. I'm now going to welcome our presenters on stage, and I'm going to open with a couple of questions, and then take questions from the floor. We've reviewed a number of measures and initiatives to safeguard access to cash. What, in your opinion, is the single most effective measure? Anne-Sophie, can we start with you?
Yes, thank you, Guillaume. Actually, I was very pleased to hear an update on the work that is being done in the Netherlands, but also in the UK through Link. Those examples were discussed at length by the working group on cash, because they showed, first of all, a joint interest from all the stakeholders who need to do something together. And both of them involve very heavily the consumers. And I think that's really the way forward for the future. So the measure of setting up a forum somewhere or a platform where the different stakeholders will have a role to play, including the end users, so consumers and retailers, in particular the small retailers, is essential for me. That's the only way we are going to be able to save cash. And we do need to keep cash for the future. I'm fundamentally convinced of that.
Thank you. Diederik?
Sorry, I had to unmute myself. I basically indeed, first of all, interesting also to hear the other insights from the UK and the Netherlands, and also agree with what Anne-Sophie just mentioned. What I believe is, I think what we found out and what we also hear as a generic team, that in most cases still, I think the bank branch and notably the ATMs are the bespoke channel that's being used for providing access to cash. And it is in those channels that we also observe reductions in, let's say, service levels or coverage. And of course, this is mainly driven by cost aspects. I think banks are utilizing their infrastructures due to the fact that it's a trade-off between the cost and benefits. So I think one way to look at it is indeed to reassess the business model and what could be done to improve incentives to maintain a cash infrastructure in certain areas. And indeed maybe provide additional incentives for remote areas, or make sure that other ways of optimization are being used. Roel mentioned that in the Netherlands ATMs are now being pulled by Geldmaat, which is of course addressing some of the cost aspects. That could be a possible solution. But what we have to be careful for, on the other hand, is that we're not starting to mandate or impose certain things, especially not on the banking industry, of course. Because that could have side effects where ultimately probably costs are being come to externalized to the users of cash, which then again could also again have a kind of effect on the use of those infrastructures, and again then on the usage of the cash infrastructure, and hence the cost, which might be a vicious cycle. So I think solutions in that area could be further explored, if that helps you.
Thanks, Diederik. Roel?
Yeah, it's so first of all, thank you indeed for the other presentations as well. It was really very interesting. All the efforts you're making to sustain the access to cash. Yeah, as I said in the presentation, I mean, in the Netherlands, so you cannot get cash in a bank branch anymore. So obviously, to sustain the access to cash in the Netherlands, we require the ATMs to stay. I mean, cashback, cash in shop. I think this can be a very helpful complementary aspect. To have additional access points to cash, but indeed we need those ATMs, and I think making agreements with all of the parties within the cycle is important to sustain a specific coverage indeed. So in the Netherlands we have this 5 kilometer criteria, but next to that you also need to have some criteria on capacity. I mean, having only one ATM in Amsterdam would not be sufficient. So you have to think about how to sustain the capacity of the ATMs as well. So and if you can make agreements with each other, that's the best way, we think. But then, yeah, people or parties do need to agree on that together.
Graham, somehow I suspect that you will not disagree that we will need ATMs.
No, I think that's one of the things that is clear through what's happened. Cash usage, although it's declined, ATM usage is still quite high, and over 80% of the cash that's used by consumers comes from ATMs. So things like cashback and access through post office counters are important and interesting, but they won't be able to cope with the capacity of what comes through ATMs. And with cashback, it works well, but the store needs to have enough cash to pay out. And we've seen, the number of transactions is good, but the values are usually quite low. So it's about 25 pounds. So much less than an ATM transaction, which is sort of averages about £80 at the moment. So, those are supporting the ATM network. Now, what we have seen is, cash transactions have dropped by 30%. The number of ATMs hasn't dropped by that much so far. So we've lost, about 10-15% of the ATMs so far. And what we've seen and what our programs are designed to do is to make sure the network covers the same areas. So if you've got 2 or 3 machines outside a supermarket, which is not uncommon, you can drop that down to 2 or 1, and that's fine. There's still enough capacity there for consumers. But what you want to do is to make sure that the ATMs in villages and small towns and the outskirts of other towns are still available. So that's where the subsidies come in, and that's where I think in the UK we've got a single ATM network link which looks after that, and we've worked very closely with the Access to Cash Review, working with consumers, with banks who are our members, and others, and again with the Cash Access Group. That's worked very well by getting everybody together, and I think that's cooperation is the key. And as we go forward, when we're trying to protect infrastructure and use shared infrastructure like shared branches, getting all the banks around the table to cooperate is the key to it. Now, that's sometimes not easy, and there are competition law issues and things like that, and so that's where regulators sometimes need to step in to get around these competition law issues. But I think cooperation is the key there, because ultimately it's everybody's trying to achieve the same thing.
It seems to me that there's a strong consensus that we need an infrastructure, that we need ATMs. There is the question of how we fund them. Diederik spoke about the business model. But Anne-Sophie also said that we may not be able to leave the cash cycle, the cash infrastructure entirely to market forces. And so there was a question to you, Anne-Sophie, as to if it's not market forces, who should step in? Should it be the central bank? Should it be the state, local communities, or a shared type solution? But would be interested in your opinion. There's also a related question. I don't know if there is, but is anyone aware of a country where the central bank operates ATMs directly? Please, Anne-Sophie.
Yeah. Well, if you raise a question that is really a big discussion among consumers. Who should be paying for the cost related to maintaining and ensuring access to cash, including in Belgium. For the moment, there is also an initiative quite similar to the one in the Netherlands, where some major banks are restructuring and reducing by 50% actually at the end of the project, if they succeed, the number of ATMs that they have altogether. The problem is also we are seeing some private banks deciding from one day to the next to stop completely offering ATMs. And the consumers are left with no other option if they want to continue to be able to access cash at a reasonable cost to change banks. And should this be then to the advantage of the exclusively digital banks, and they have a more profitable than business model, and then cash, the risk is that cash would become something that would belong to the essential or the fundamental services, and maybe only aiming at offering cash to those who really cannot means than cash, and that will make the model very expensive, either for the consumers, which of course is certainly not something welcome. As I mentioned earlier, most of those who really need cash or those who have a very low income or small pensions. Yet cash is a public good. So it is supposed to be available to you whenever you need it. And remember, we were, at least the older people, were asked one day to just stop being paid their salary in cash. They had to take a bank account, and their salary or their pension would be paid there. In return, their money would be available whenever they would like to access it. So we should remember the function of cash as a public good. And then why not see if discussions can be developed with all the stakeholders to see whether guaranteeing access to cash could be a shared cost among the private industry, but also why not the national banks. It will depend on the countries and on the model they agree. But the fundamental point is that we need more than a minimum access to cash. We need a sustainable cash infrastructure, and that will require at least the levels we have now. Why? Because we have more and more digital means, more and more risk of failure. We saw it twice in your symposium. We see it every day in cash payment, digital cash payment. Something goes wrong, and we have to be able to continue to function. So having the backup function of cash is something that will not function unless there is a good, at more than minimum, we would say, cash infrastructure behind it. And that was the study in the Netherlands. They showed it. It's don't let it go too far. Otherwise, you end up like in Sweden. They had to pedal back, and it's not that easy, becoming too costly then, also for retailers.
Well, you seem to agree. So can we expect you to achieve the signature of the covenant in the next week, and everyone will chip in to cover the costs?
Well, yeah, let's hope for that. I mean, I think this will be the best outcome for all parties, but we have to see whether it will be the case. But yeah, I think who pays for the infrastructure? It's an interesting discussion. If you would argue that, I mean, if the usage decreases, then the cost per transaction goes up, and you can say this is an issue. But you can also say, well, if you look at the total cost of the infrastructure, so the absolute total cost of the infrastructure, it actually goes down, especially due to initiatives like Geldmaat, where the number of ATMs is being reduced and operations are being done together. Then I mean, you could also argue that the problem becomes smaller and smaller because the total cost of the infrastructure goes down. So why is it suddenly a larger issue? But if you would say, well, yeah, the cost per transaction is an issue because that's the way we look at it, then you well, and this is also how some parties look at it. So then it becomes a bigger issue, and it's exactly what I described in the presentation. And well, in my opinion, there is still so many things to do, also in the Dutch cycle, to further optimize the cycle, make it more cost efficient, without really reducing the infrastructure, but just on the back office side, work together more closely. And there, you might even say that more consolidation would be interesting, it would be helpful, instead of having more parties. Although, I mean, having less parties is also gives some problems, but you can solve those in different ways. So, but if you will be able to further optimize the cycle, then you may not have to decide on the question, or you may not have to answer the question that who should pay for the infrastructure, and just let it be like it is right now. And well, along the way, when it becomes more like a public good, indeed, Anne-Sophie, then you might say, well, there is a role for the government. Yeah, we shall see. But I don't think it's necessary for the coming years. But yeah. Let's first sign a covenant.
Yeah, I think just very quickly in the UK, we've kind of got a sort of hybrid system. So most of the ATMs outside bank branches are run by independent operators, so the IADs. So they depend on the interchange for their income. And what that means is for a bank, their costs, as long as we don't change the interchange, we haven't changed it per transaction for many years, or several years now, their costs have dropped significantly because their cost is the cost every time one of their customers uses an ATM and they're using them less. So they've seen, effectively a 30% reduction in their ATM issued costs. Now, for the ATM operators, obviously that can be a challenge because they've got to, continue to run ATM networks. And so, the ones I talked about earlier have been subsidized. Others, they've managed to make some cost savings, and some of that has been, at the expense of rent, so not necessarily such good news for the retailers. Others have been cost efficiencies, and some costs are less because you're delivering cash less to the ATMs and things like that. So I think the ATM area is probably reasonably able to cope with the reduction in ATMs and the reduction in volumes. The trickier area, I think, is the infrastructure that sits behind it, which is the cash centres and the like, because in the UK they are operated by a number of parties, which are commercial operators. One is a bank, others is G4S, and a couple of other companies as well. And obviously they are commercial and they need to make a return. And moving that model of sort of 4 or 5 big players, the post office is one, to a number of smaller players is quite difficult because these companies have commercial interests and they want to make money, and it's not easy to see how you can move from that situation to sort of nationalising the whole lot and it being run by the government or the Bank of England or someone like that. So I think as the Cash Access Review said, the cash infrastructure behind the ATMs is a challenge, and that I think might be a challenge going forward because there's not an obvious route for making big savings there while still keeping it as a commercial model between competing commercial entities.
I think you raise an interesting point because it's worth recalling that the race to reduce the infrastructure started with central banks that started closing branches quite a few years ago. There's one branch left for the Bank of England in the UK, one in the Netherlands. I happen to live in a country where we still have quite a few central bank branches. But I think it has shifted some of those costs to the commercial sector. I'm going to take questions from the audience. So the question, which is directly related to this, but do you think that central banks should invest in ATM networks when the private sector does not see this as possible?
I think from the UK, I don't think that's been put forward as a solution. The Bank of England actually did have a few ATMs. There was a handful of ATMs in its head office in the Bank of England in central London, but they were only accessible if you had a Bank of England bank account. So that's pretty much only the staff. So I don't think that seems to be a solution that would work here. Having a sort of super IAD to run ATMs seems a possibility, or getting somebody like Link to commission ATMs from operators would seem to be a solution. So some central entity, which could well be Link or another entity of that type, would commission ATM services from a number of suppliers. The ATM is a big network. There's still 50,000 ATMs. So there's potential opportunities for, multiple suppliers of ATMs who could then run them on behalf of some central brain, as it's been described, to look after the ATM network. So I think that seems more likely rather than the central bank, which, as you say, the central bank has quite a lot of roles, but running ATMs, I don't think seems one of them, at least in the model that we run here.
And Sophie?
In a way, that's what we found from the working group when we had the input from Post Europe, which is the European network of post offices. We saw different models, and in some countries, the post office as such is a separate entity from the government as such, but they do have, they are mandated to ensure that they cover geographically, in particular, the areas that are not so well deserved by the private credit institutions anymore, or have never been. And in a way, would you consider that as being some kind of public initiative? Because they have this special mandate and they have a status of public general interest, so they get compensated so that they can still maintain the presence. But at the same time, they are being asked. That's what we heard from Post Europe. They are being asked to still compete on the same level as private profit-making institutions, and that becomes sometimes just too much for them. It's just not sustainable. So obviously, it's a question that should be discussed. It's really something for all citizens to get engaged in this dialogue, to decide what kind of model do they want. It may differ from countries to countries. The UK, indeed, I don't think is a country where they won't be at the forefront for a public central bank initiative providing ATMs, but you do have some discussions going on in some countries. One model being explored, or you have an initiative to ensure universal banking service, for example, is something that has been introduced recently in Belgium. It's the private banks have decided to guarantee access to everyone with this universal banking service, which will cover access to cash. And this, the initiative is really aimed at ensuring that everyone has access to cash, because they acknowledge that a significant part of the population just need cash to function. But it's not a public, it's not from the National Bank.
Thank you. There are also a couple of initiatives in Spain as well as in France, to my knowledge, where municipalities are subsidizing ATMs. There are a couple of questions.
In Belgium too, actually.
Yeah. And if I may add, Guillaume, the question was about should central banks run ATMs? That's I think one extreme versus the other, where we still have. It was said by Graham before. In fact, the current cash cycle is built up of a set of commercial actors who all need to make money in between to keep alive. That's completely privatized over to the private sector, and having the ATMs run by the central bank, it's completely run by the public sector. But you could also look at a kind of hybrid model, especially if you see cash as a public good, like the electricity at the moment and the water, where you basically have an infrastructure that's the public good, and that could be at least maintained by government funds or by semi-public entities, which then allows on top of that some commercial actors to provide their propositions. That could be also a kind of hybrid model to look at it. But again, that comes back to the business model issue I mentioned before.
Yeah. May I add, Guillaume?
Certainly.
So from our central bank point of view, we indeed do not have the ambition to run an ATM network ourselves. I believe it's not even allowed if we wanted to. But I agree with Diederik that there are certain options, and you have options completely in the public, completely in the private sector, but there are many options in between, and I think we will have during the period of the covenant, we will investigate all of those, get all the pluses and the minuses of the options, and then come to a conclusion. We're not really ruling out some options there, but we do know that if the use of cash decreases any further, then this public good character of cash will be more prevalent.
I face a bit of a conundrum, because I promised that we'd keep this short, and I tend to keep that promise, but we still have a number of questions. So if you all agree, what I'll do is we'll collect the questions, and we'll share those with you, and try and provide a written answer. I also realized that in spite of everything we've discussed and all the work that's been done, this is still very much a fast-changing environment. So maybe in a few months we can bring this group back together and see whether the situation has evolved. So is that okay with you? If we answer questions in writing?
Yeah, for sure.
And we'll post those on our website. But again, what strikes me is that there's very strong consensus on the necessity to maintain a cash infrastructure. One of my colleagues, I think it's Franz Zeitz, I think describes this to toothpaste. Once it's out of the tube, it's very difficult to put it back in. I don't think we, or I do believe there's still a strong ongoing discussion to see how we can achieve this in a sustainable way. And I think we're seeing a mixture of regulation, changing business models, but as well as the innovation, I think plays an important role as well. Yeah, it's time for me to close this webinar, and first like to thank all of you. I thought there was enlightening presentations, and I know it's time consuming and hard work, so thank you very much. I'd also like to thank the reconnaissance team who've been providing the support and putting this together, but also apologize for the technical glitches that we have faced. Lastly, this was the first of our cash talks, and Philippe, if you could show the next slide, please. No, okay. In this case, I will do without. But just to say that we're planning to hold these on a monthly basis. So in March we will be discussing the cash and central bank digital currency. In April we'll be talking about cash tech, and I presume that many of the questions raised today will come up again. And in May and June, we'll be holding an exciting futures literacy lab on the future of money. So please follow our website for further information and dates. And last but not least, we'll be holding our in-person Future of Cash conference in March. So those in September in Madrid. I'm sorry. Yeah, so there you have the next events. With that, thank you all very much. Stay safe, and see you next time.
Thanks a lot, Guillaume.
Thank you very much. Bye-bye. Take care.
Bye.